Hi, this is Zach May with US Chartbreakers here at Zach's Traders Cafe for Thursday, the 15th of February. And a nice bounce for the S&P yesterday. We managed to, or in fact during the week, we managed to bounce right off that rising trend channel there from back in October, just as we did at the end of January. So that gives us confidence that we'll not only stay on the right side of 5,000, but maybe even get an end of day close back above the gap down from the highs, around 50.20, above that on an end of day close basis, looking for 51.80. as soon as the end of next month. If we do break down below the 49.40 area and then October uptrend line, then the risk is of a retest of 48.50, which was that late January support for this market. Moving on to the stocks, and return of an old face in the form of blink charging, and here you can see that we've got this broadening triangle base. We've obviously failed at that top of that triangle there at the end of December, but shares have regrouped, and the view now is that above the 50-day moving average, around $2.90, we could head up to $5 as soon as the end of next month. Another stock which is a relatively frequent flyer here is coming up here, Bioxcel Therapeutics, and here we're hoping for a rebound now that the shares have managed to cling back on the 50-day moving average around $3.10. Above that, there's a gap to fill up to $3.65, and obviously the bigger picture there of the next month or two would be for a move up towards the top of the broadening triangle base that we've got in place since August, as high as $6 plus, but that's for March-April time. Initially, 365 while we're above the 50-day line, and like to stay on the right side of 250, as that was the old January support. Moving on to one of the winners of the recent past, and we'll see that now with Cogent. The shares gapping up and actually exceeding our initial target there, top of the rising trend channel base that we were expecting. Target there $7.20. Obviously we've overshot the runway, now looking for a new leg higher as high as $10.20, which is the upper power of that rising trend channel, and ideally get to $10.20 by the end of this month. In terms of the downside, really I suppose the best thing to say is we want to stay on the right side of $8, especially as that was November resistance in the latter part of that month. The next situation is Engene, where we were looking for, or we had this resistance line rejection there from the latter part of last year, looking for around the $15.60 area. We managed to exceed that, but above $15.60 could have a new leg up to $25 by the end of March if everything is in place. And obviously you can see that the latest support for the shares is basically the old November-December resistance. Nice situation to keep an eye on coming up next, and it's Electromed. Here we've got the shares managing to stay above recent support. On to Electromed, where there's been this massive gap to the upside after a very range-bound price action period from basically last summer, either side of the 50-day moving average. The resistance in the top of that range around the $11.20 level, and we're looking for that to hold while we head for a potential top of 2022 triangle formation as high as $16, hopefully by the end of next month. But all the while, we'd like to see that support come in above the $11 zone. Moving on to another interesting situation, which hopefully will continue to have legs, 1847 Holdings. What you can see here is that obviously we're coming off of the back of a very big downturn in the stock, but it looks as though we've got a rising trend channel base. The triangle there around recent resistance, let's say it's $3.50 level, and above that we're looking for a breakout towards $5.30 by the end of next month. The reason for being relatively optimistic here is that the shares have found support at and above a rising 50-day moving average. When you get that near the lows, especially after a gap close buy signal as we've had, that tends to be a turnaround signal. Next up is stock maybe in a rather better position than that, especially at the moment. GSE Systems here. We've broken above the 50-day line at $2.10. Above that, we're looking at the top of that rising trend channel from back in September, as high as $5 by the end of next month. Next situation is also on the Bulltac Healthcare Services, where we gapped higher, breaking neckline resistance there at $11.20, which means we're looking for up to $13.80 while we hold above that initial 2024 peak. 50-day line rising as well, which is helpful to the cause. Larimar is next, and here we've managed to exceed our initial target there at $8 by quite some margin, which is always very pleasant. The current situation is trying to work out what the next destination for this stock may be. A clue comes from a rising trend channel from December 2022. That's heading towards $16, and we're looking for that as soon as the end of next month. Ideally, we stay on the right side of the $10.50 area, as that was or has been the latest support zone for the shares. Lyft is next, and seems to be getting good coverage around the place too in terms of the rise in the shares. Here you can see that we've had this gap through a rising 50-day moving average. Initial target there, that resistance line there from March last year. But if we can get through that, so nominally the 1680 level, then there could be another leg up to as high as $25 by the end of next month. It looks like quite a strong situation here that we gapped down there back in February last year, and we gapped up now, so it could be a bear trap island reversal. On to the last two, and starting off that last two with Meta Materials. Here it's one of those fiddly situations again, a bit like 1847, where we're trying to get off the lows. The initial target here of this notional broadening triangle is the 50-day moving average there at $6. Above that, we're looking for up to $11.50 over the next 1 to 2 months. But the key here, probably in the near term, is just staying above that recent resistance that we had around the $3.80 level. Above that, then the 50-day line at just around that $6 mark seems to be a viable target over the next 2 to 4 weeks. Finishing off with this contender, which is Omeros, and here the pattern is of a rising trend channel gap close as well, so it's a bear trap reversal, and at the top of that rising trend channel from back in August, currently heading towards the $8 mark. We're looking for that by the end of next month, while we hold above the $4, or we stay above the right side of the $4 area, which was initial 2024 resistance. That's it for me today. More updates tomorrow.